Hello everybody, hope you're doing very well this evening and welcome to tonight's Contenders live stream. Obviously a day where Bitcoin has obviously been, pretty intense today, a lot of moves. So I'm going to cover Bitcoin today in detail at the end of the stream on the way that I've been trading it today, which I think is going to be good for some educational purposes and then just how my outlook on that. So I'll keep that to the end because I know it's highly volatile right now, but I obviously have to concentrate on the stream. So I'm going to start off with a Go OMG chart of the week. Okay. Then move on to the head and shoulders patterns and how to trade them. So that's going to be the main focus of today, is going to be these head and shoulders patterns. Okay. Because it's quite interesting that we had actually, the potential head and shoulders pattern on Bitcoin literally a few days ago. So it's a nice time to go through head and shoulders because I had so many questions last week of, is this an inverse head and shoulders? What am I looking for with the volume on the head and shoulders? Basically, like last week, I probably had about 20 questions about head and shoulders just because, there was that potential one on Bitcoin. So I am going to go through head and shoulders today, inverse head and shoulders and complex head and shoulder patterns, which if you don't know what a complex head and shoulder pattern, by the end of the day, you will know what that is. So that's going to be good. And then I want to go over exchange listing trade setups. And I have gone through an exchange listing setup before on how you can look to trade exchange listings. But EDR, I want to go through this one in detail of what you can look for. Last time obviously went through an EMA strategy. Today I want to go through an EMA strategy on a 5-minute time frame and looking at chart patterns at the same time. As you can see, over the last maybe 4 sessions, we've done quite a lot of patterns and how to trade patterns. So this is like bringing it together with an EMA strategy and patterns together of how you can look to sculpt. It's kind of sculpt trading, but look to trade exchange listings. And we'll run through EDR as the example, or ERD. I can't even remember what it is. But that's the coin I'm going to go through, and then ending with Bitcoin technical analysis. You can probably notice, yes, the stream layout has changed. So we've got slightly different graphics in here. So I hope you like these new graphics. And I went to this guy, and he was like, because I was like saying about how I get like a sore throat after these. So I've been like taking these like kind of, I don't even know what the right word is about things where I have to like speak through my diaphragm. We'll see how this goes, and I'll see if I have a sore throat by the end of today's Contenders live stream. I hope not. So let's go straight into this then with a Go chart of the week, and this was pretty nice one, to be honest. On a day when I posted this, obviously I was slightly cautious because I knew any Bitcoin moves are going to see altcoins destroyed. You have to be extremely careful when trading altcoins when Bitcoin's moving up. Okay, the inverse correlation is very much still a thing. When Bitcoin moves up, the altcoins move down heavily, and this was obviously on the 8th of July where Bitcoin was more likely to move up. So you just have to be very careful with the altcoins that you're picking to trade because 99% of altcoins went down. Okay, Go right now has gone down, but at this post, it actually was the only green coin of the day. So this was a really, really nice pick. I'm not going to lie. So it was nice. And then obviously when Bitcoin moves down, the altcoins move up. So over the last hour or so, you would have seen a lot of altcoins have had like 10, 20% bounces. And this is because of the inverse correlation that we're seeing with Bitcoin. With it, Bitcoin up, alts down, Bitcoin down, alts up. It's just a really high inverse correlation at the moment. It's just something you have to be aware of in the market. Okay, so Go. Let's start off with this. Not too difficult of a setup, really. Okay, you obviously had I'll load up the fibs in a minute, but you're looking at an overall 786. Okay, so we had a 786. I'm trying to remember this now. We had the 786 support, and we also had the trend line support going on in here. This was like 3 days ago now, struggling to remember. I think, of course. So 786 support level, okay, just had bounce from that double bottom style, and you had that trend line support, okay, so a confluence of factors again. We never ever take just one factor on its own. We have to find a strong case, and once we've built a case for our setup, then we take it, okay. So it's like a judge and jury executioner. You don't file away somebody until you've built a proper case, either in their against or therefore. And you think of trading like a court case. I don't know. This is maybe a bit of a random example for you, but you want to build a case for longing and taking that trade, and you want to build a case for not taking that trade, okay? And if you are building up a good case for longing the trade, and there's only one factor saying, don't take this, Bitcoin might move down, but on the other hand, don't take, your case against not taking this trade is, Bitcoin might move up, and that's going to mean my altcoin moves down. And the other case is, we have trendline support, we have 786 support, we have a double bottom, okay, and we also have Go against USD also holding a key trend line style support, okay. So that is one factor of Bitcoin might move up and my altcoin might move down. That's not really a case, if we're honest. That alone is not really a case not to take a setup, okay. And on the other hand, you have four strong factors, 4 factors of confluence saying take the trade, okay. and that's why we obviously took this took this trade, okay? Because there was 4 factors, 4 and 1 against, okay? And it's always you want to build up a kind of case for taking a trade or not taking a trade, okay? And this is something I'd recommend you do, okay? Did you do this in your own trades? You know, you don't only want to look at the reasons for taking a trade. You also want to build a case against the trade, and then if you've got, you know, write it down. If this helps you, write it down. Write down your factors for taking, write down your factors for not taking, and what has the strongest argument. And don't just have a bias of I want to go with the weaker case because that's what my heart's telling me. You know, write down the factors on a technical analysis point of view only, okay, and go with whatever has the strongest case. Do not let your emotions get involved, and that is a really good tip that I can give you. If you actually write them down, okay, and review, analyze, take the trade with whatever has the most strongest case. Okay, I hope that tip helps you because I believe it would. Okay. Because I know many people are, you know, too scared to take an altcoin setup, etc., while Bitcoin is like this. And, you know, you cannot, I don't want to sound like condescending or whatever, but yeah, I'm also in the same boat. I'm very hesitant to take altcoin setups when Bitcoin's moving up, okay? Really hesitant to take an altcoin setup, absolutely. But if the setup is still there, I would still take the trade. It's not like I'm 100% not taking any alts. I'm taking a few select alts where the setups are good, okay? So I hope that explained that. And OmniMyGo was, for me, a good setup, okay? So you can see here, you 208 entry, okay, stop loss 199.30. It's not that wide of a stop, about 4%. When you're looking at 12% gain, it gives you a 3-to-1 risk to reward, which is a nice trade to set up, okay. You also can see that just prior to posting this in the group chat, or in the chart of the week channel, we had just seen this big doji kind of candle, spinning top, whatever you want to call this, like a long lower wick, long upper wick, but at the end of the day, it did hold support there, okay, so it's just giving a really clear invalidation. You break below this, I want to be out the trade, okay, but I was looking at this more bullishly, and you can see what happened. So this was me taking profit on this trade, because literally I posted this for everybody on chart of the week, and then within 2 hours it moved up straight away like 10%. No, I think it was 8%, 8% like pretty much within like the hour. So this was a nice time. And now let's go over to this a second. So what we can see here, so Bitcoin moving down slightly. So what you can see here is obviously there was our entry. You can see this trend line that you're holding, trend line, break down, double bottom again. Well, you can just see that's a really clear 203 is a really clear invalidation level. And just so you know, the stop loss obviously placed at 199 is you don't want to ever place your stop loss at like 200 because that's a psychological. 199 is giving me a bit of room just to take away that psychological 200 level. Okay, so yeah, that's what we're really looking as our stops. Target, as you can see here, has not hit. Absolutely did not hit top target. That's the key I want you to take away from this. Did not hit my top target, being 235 sats. My take profit one was 221. We actually reached a high. Where was this high in the end? Of 228. Okay, but you can see here so this was in the moment actually while it was still breaking up. Okay. You know, I made a decision. Okay, I'll just read it here. So the trade was on the green. You know, the only green alt of the day. I'm not going to lie, good selection, good entry. Okay, in a time when BTC is destroying alts, I was conservative and took a second take profit at the time of the print screen to the right, which was 226 sats, and you know, being the 15 you can see here the 15 200 exponential moving average, which I do use as a strong guidance for resistance and support. Okay, so basically, just so this makes sense to you all, so my take profit was obviously for 235 and take profit one being 221. Okay, we hit 221, I took profits, and I was still left with money in the game to 235. But when I saw this, we were hitting in a time when I'm more than happy to take an 8% trade. That for me is a really good day trade. This was only planned for a short-term trade. So if I can get 8% in a day, that for me is amazing trade. So I did take an extra percentage of profit off of this 200 EMA. Okay, and then obviously the move has since came down and I got stopped out the rest of my position. So it was a profitable trade. It was a nice trade, and it was just, you know, being adaptable in the moment. Okay, although my take profit top is 235, it's being adaptable and not just saying, well, here's my target, I'm holding for target, I'm not doing anything about it. Because let's imagine that you did do that and you enter 208, you see nearly a 10% gain turn to I guess you'd have seen that turn to a 4% stop loss. You know, this is why it's important to manage a trade and not just watch it. You know, let's say that you hit 234 sats, for example, and you got one sat away, you see a 12% gain to a 4% loss, etc. You know, so it's just being manageable, okay? And you can also see the fibs that I've got up here. So from high to low, we also got rejected exactly the golden pocket. No surprise, really, is it? When it coincides, so we're looking for confluence, also coincides, well, there's a lot of support, flipped into resistance. Okay, so there was a strong confluence of resistance here, and you're obviously going to see here, I'll put it on a second. Okay, oh no, this is totally messed up at this point. Okay, so I don't even know how that's happened. Unless this was the one I was looking at. I don't even know. But nevertheless, that, you know, it's just the importance of managing a trade, especially if it's a short-term time frame trade. Yes, if you're a swing trader, you know, this was a short-term trade. If you are a short-term swing trade, yeah, I guess that should, yeah. So it's like if you are in this for a short-term trade, you need to actually be managing a trade. You cannot enter for a short-term target and not really manage it at all. Okay. Daniel, please can you adjust the settings of I don't know. Some people are saying that it's blurry. I'm not sure. If the screen is blurry, I'm not sure. It might be your connection. I don't know. If more people comment about it, then let me know. Hopefully it's not blurry for everybody because I don't know. Just have to let me know. But yeah, continuing on here. It's just highlighting the importance of managing a trade when you enter a trade. Okay, it's not just enter the trade, leave it for take profit and forget about it. You do want to be managing the stop losses, moving your stop losses up. You do want to, if you notice a rejection happening, for example, you do want to be actively, taking profit in that example instead of just like seeing a rejection happening and just thinking, rejection's happening, it's just going to carry on up. Okay, that doesn't happen. Okay, you need to actually be aware of what's happening in the trade while you are taking it. Okay. So yeah, obviously, for me that was managing this, and then the rest of my position did get stopped out, so it wasn't obviously a full profitable trade, but nevertheless it still ended with profits, and that's what you want as a trader. Okay, it's actually really doesn't happen a lot. If I enter a trade to a target, I would say I take 10 trades in a day with an entry, a stop loss, and a take profit. Okay, I would say in average, if I set my trade out like this and I actually designate an entry, a stop loss, and a target, I would say I only probably hold about 15% of my trades till target. I close out a hell of a lot of my trades prior to the target being hit. I'll be completely honest with you. Just because maybe you could say I overmanage my trades. Obviously, I have my own tracker where I take note of these things, and the majority of the time it works for me. Okay, so it works for me to overmanage my trades, and just because I have that target there, very low amount of time I actually hold till targets. So that's just a thing. Obviously, if you are managing your trades, okay, make a note of it. Are you more successful by trying to manage your trade while it's happening, or would have you been more successful leaving your trade alone and not even trying to manage it? Are you a better trader just entering the trade, setting a stop loss, setting a take profit, and forgetting about it, or are you a better trader entering an entry, a stop loss, and a take profit, and actively managing the trade, being in there at the time? Okay, I am better managing my trades rather than forgetting about them, but I love day trading. Okay, so this is for me. I'm really good at managing trades, but other people might find themselves over managing a trade and actually losing out on money or just losing money, period. That's for you to decide. And when you're recording your trades, and I got a spreadsheet for you all next week. Really sorry about these alerts. Sorry, because that could be loud. But yeah, it's just I will have a spreadsheet for you next week, which is going to help you track your trades. So that should be helpful for you all. Okay. So, moving on to today's main session, I'm going to try and turn off the alerts really temporarily. No, this is why I turned off my alerts on this account, because this is one that I use for streams. But then because I'm using this account during the 20 to 200k challenge, I set up alerts on this, and so I'm just going to leave them on for the rest of the stream. Apologies, I'll need to turn them off the next time, but you might hear these pings going off for the next half an hour as we see some volatility in the crypto space. Apologies in advance for this, because it might occasionally bing. Apologies. Okay, so moving on to the main focus of today's lesson, and this is something that I've been debating. Obviously, when each stream that I do, I believe I'm getting better and better at educating, and also just getting more confidence in front of the camera, etc. So, the way that I plan to do these streams going on into the future is, obviously from feedback that I've received and, just speaking to other mentors, getting experience, etc. I need to focus on one section of education really a day or a week. So obviously the main focus of today's session is going to be head and shoulders patterns. So at the end of this session, you should always know how to trade all head and shoulders patterns. Last week, I obviously done consolidation. You should know how to trade consolidation. And if you don't, then you can come with questions. But, I want to do these live streams where I focus on one topic a week, and at the end of that week, I want you to have confidence saying, Daniel's covered head and shoulders. I know how to trade head and shoulders patterns, or I know what I'm looking for here. So that's my aim for this now, is to do one topic a week, and then you have the full understanding and full knowledge of trading that topic at that session. Okay, so it'll be 1 week, every week a new topic, and you are gradually going to understand every single topic that I trade on in a lot of detail, so you yourself can make profitable trades and start winning money. That's what you all want, to make money. That's my aim with this, I guess. Starting with the standard head and shoulders pattern, which is a top reversal pattern. I'm going to give you some comparisons to Elliott waves and just 3 peaks shortly. So bear with me. I'm going to go through the Elliott wave and 3 peaks. So we're going to get a big overview of Head and Shoulders today, basically. Okay, so the Head and Shoulders pattern, okay, this is a top reversal pattern, so you only should be seeing a Head and Shoulders at the top of a move, okay, so you don't generally see it, a bottoming pattern. It's a top pattern, so the price will come from the bottom of the chart and up to the top of the chart, and that's where you're going to form your Head and Shoulders pattern, okay. The problem that you're going to see with Head and Shoulders patterns, okay, is well, not problem, I guess, but the characteristic of a Head and Shoulders pattern is the volume is really, really, really important, okay. So yeah, what I would say is it's kind of the number one thing that you're looking for. Obviously, you're looking for a little bit of symmetrical assets between the left and right shoulder. That is not a must. Okay, it doesn't have to be symmetrical. They don't have to be at the exact same heights like I've done here, for example. This could be lower, this could be higher. It's just the 3 peaks that you're looking for. So you're looking for a peak on the left shoulder, a higher peak on the head, and a lower peak on the right shoulder. This could be a smaller peak, this could be a higher peak. It doesn't matter as long as they're not as high as the head. These left and right shoulder has to be lower, okay? But for me, the number one importance of this, but number 2, the most important is that you actually form the 3 peaks, I guess. But the second most important thing is the volume. The volume is highly crucial for a Head and Shoulders pattern. Without the volume profile, it's not a valid Head and Shoulders pattern. I don't care what people say. If it is not a valid peak and trough, then it's not a Head and Shoulders pattern. The volume is very, very important, okay? So I've wrote it out here. I'm just going to read it out for ease. So basically, the volume should be highest on the left shoulder, and this is in a standard Head and Shoulders. I'll do the inverse in a moment because it's different volume profiles, okay? So on a standard Head and Shoulders, which is a top reversal pattern, volume should be highest on the left shoulder rise. So this is the left shoulder rise. We're all in agreement? Yep, this is the left shoulder rise. This is where volume should be the highest, okay? So imagine we have our volume bars at the bottom here, okay? So the volume bars here, the bull volume, okay? So the bull volume should be the highest on this left shoulder. On this rise, you want to see really high bull volume, okay? Or it doesn't necessarily, let me rephrase that. It doesn't have to be really high bull volume, but you want to see high bull volume here on the left shoulder rise, okay? Or the highest of the 3 peaks. You want to see the highest on the left shoulder rise, okay? And then you obviously move down for a sell-off, okay? So there's your high rise here, and then your low volume sell-off, which you could view this as a bull flag, couldn't you? There's your rise, there's your bull flag, there's your continuation, okay? Just imagine it like this, okay? Again here, bringing in other concepts that I've taught you. So I've taught you these bull flags, haven't I? So you get your flag, and you get your pole, sorry, then you get your bull flag, you get continuation, bull flag, continuation, sell-off, bear flag, down, bear flag, down. Shut up, Link. Let me just see if I can turn this off really quick. Oh, no, I didn't get well. But yeah, that's what you're looking at. Basically, you've seen some flags in here, and it's like bringing other things that you've learned in technical analysis into the Head and Shoulders patterns. This is going to help you a lot, okay? So, yeah. Going back to the volume, you want to see the highest on this left shoulder rise, and then you come down and you do get declining volume. But this is the characteristic of the Head and Shoulders pattern, okay? This is really, really important. The rise of the head, the rise of this head here, okay, is going to have less volume than the rise of this left shoulder. So imagine you have your volume bars here. You're going to see high volume on the rise of this left shoulder and less volume on the rise of the head. So you're going to see, really important that you see less volume coming up in this head. For me anyway, this volume profile is very important for me. So you want to see less volume on the head, okay? And then you sell off again, okay? And this could be on an increasing bear volume, okay? So you might start to see on the rise of the head, which was less volume than the rise of the left shoulder, on the decline of the head, you might actually see an increase in bear volume higher than the rise on the on the head. So imagine here you had 10 million, okay? Here you had, okay, so let me do it with numbers, it might be easier to think. Here you have a 10 million increase, okay, so 10 million bull volume. Here, on the rise of the head, maybe you only have 8 million bull volume, so 2 million less here, okay, that's substantial, isn't it? And then maybe on the decline of the head, you start to see 12 million bear volume come in, and you've seen more bear volume come in on the decline. That's a really, really big factor that you're going to see. And then on the rise of the right shoulder, this is where you're going to see the less. Maybe here on the rise of the right shoulder, you see only 5 million bull volume come in. So half of the left shoulder, isn't it? So 10, 8, only 5 million coming in here on the right shoulder. That is very worrying, because what is that? That's a bear flag, isn't it? So we're seeing a 12 million decline and we're only seeing a 5 million rise. This is characteristic of a bear flag, bringing it back to this. And we are only expecting a sell-off to occur, okay? And then that gives you our head and shoulders pattern. We've seen a break of the neckline. So this is the neckline. You draw a trend line to connecting the low of the left shoulder and the right shoulder peaks, okay, which is the neckline. There's your head and shoulders, and there's your neckline. A break. So a head and shoulders pattern at this point is not confirmed. As you start to come down here, okay, as you start to come down here, it's not a head and shoulders pattern yet. You have to be patient with this. It's only confirmed when you break the neckline. So all of this is not enough for a head and shoulders pattern yet. Break the neckline, that's when you short. Okay, so it's only on a break of the neckline. You do not really, you do not enter your shorts prior to breaking the neckline unless you're trading the bear flag. You are, for a head and shoulders pattern, you're not shorting until you break the neckline. That is very, very important, okay? So that's really, really important that you understand that, okay? And yeah, then obviously as you break the neckline, you are breaking through, and this is the most important thing. As you break, so this is really important. As you break through the neckline, you want to see this part of the breakdown on very, very, very high bear volume. So we're saying, let's say it's a 15, 20 million sell volume coming in here, okay? So your biggest volume, the biggest of more than the rise, you know, the biggest volume coming in upon breaking the sell off, upon breaking the neckline, okay? That's where you're going to see your 15, 20 million, you know, I'm putting into just an example. So you're going to see the highest volume coming in on the break of this neckline, okay? What I would say, that a comparison between head and shoulders and inverse head and shoulders, when you break down to the downside, an increase in volume bearishly is not as important as it is when you're forming a bottoming pattern, okay? When you're forming a top pattern, volume is actually not as important as a bottoming pattern, and I'll explain that when I do the inverse head and shoulders in a second. But basically, it is, you know, you do want to see an increase in bear volume, but it's not the end of the day if you do not see it. And if you do not see the increase in bear volume, then you're more likely to get this retest, okay? And that's a retest of the neckline before you sell off again. Support broken, flipping to resistance, breaking down again, okay? So SR flips, so you know, I've taught you SR flips, I've taught you bull flags, bear flags, and it's all coming together with the head and shoulders pattern. Really nice. Okay, and so if you break down here on massive high volume, let's say you get a 50 million, you know, sell off, you're not going to get a retest, or it's you know, you can never say you're not going to get a retest, or, you know, trading, anything can happen, but you know, you would say it's not probable that you get a retest. If the sell-off volume is very high, it's unlikely that you get that perfect retest opportunity, okay? If the volume is maybe average low, then you are more likely to get that retest, and then on the retest, that's where you want to see the increase in bear volume, okay? So maybe you break down here on average low volume, you retest, but your retest, this part of the retest, this upwards move is on even lower bull volume, so maybe you get 2 million buys coming in here, so really low volume on the rise, and then you retest the neckline, and then you sell off again with your increasing bear volume, and that's important that you see the increase in bear volume here. Okay, so that gives you overall the head and shoulders patterns. Okay, so I just make sure I've cut. Well, I guess you can just pause and read this as a cheat sheet that I'll upload to the website as well. But yeah, oh yeah, the target obviously. So the target for the head and shoulders pattern, once you've breached the neckline with an increase in cell volume, you take the distance from the head to the neckline and copy and paste that over to the breakout of the neckline. Okay, take the exact percentage, or here you can see this move down here in this example, 1703. So you copy that price to the neckline break, and obviously you're expecting a move down of 1703. So the exact same measured move there of the breakdown. That's how you get targets for this. Okay, yeah, break is always wait till close candle. More important, volume. So if you start to sell off here and you see massive sell volume coming in, you would want to short straight away, market short this, or I personally would. If I saw massive bear volume coming on the break, I would market short this. The conservative trader does not market short this. The conservative trader waits for the retest. Does the retest always happen? No, it doesn't always happen. But I'm more aggressive in this type of scenario. I would market short. If I saw the increase in bear volume, I would market short straight away. Okay, but if you're a trader that, even if you're not at your computer, obviously you can't do that. So maybe you wake up, okay, the next day and you've seen it neckline break. Well, your short is waiting for the retest. If you don't get the retest, unfortunately, you just miss the trade. And it doesn't really matter if you miss a trade. You're going to see hundreds of trades a day. If you miss one trade, it literally doesn't matter. But yeah, if you did miss that trade, you're waiting for the retest. And if you don't get a retest, who cares? You just move on to the next trade. Would the corresponding RSI and histogram profiles look like? So really what you're going to want to see for a histogram perspective is when you move up for the head, okay, you're going to want to see bearish divergences. So here you see a the volume decreasing as you move up for the head, bearish sign. Okay, you're going to see the price make a higher high, but your RSI is going to make a lower high. You're going to see bearish divergences coming into the head as well. So you're seeing a confluence of factors with RSI histogram bearishly diverging here. Okay, so it's like seeing it all come together. Okay, best on higher time frame versus lower time frame. 100% the answer is higher time frames. Okay, patterns play out best on higher time frames, period. So you see this on a higher time frame, it's going to be more valid. If you see this on like a 5-minute chart, I wouldn't trade it. Okay, I'm not a pattern trader on that sort of time frame. You want to be taking these sort of trades on high time frames. If you see a head and shoulders on the daily, perfect, you'd have to take it, to be honest. Okay, so it's, yeah, higher the time frame, the more likely it is to play out. You see this on a 5-minute, it's very unlikely, not impossible, but the higher the time frame, the more likely it is to play out. Okay, so that's the standard head and shoulders. Now I'd like to give you the inverse head and shoulders, which is obviously very similar in terms of targets, but the volume profile is going to be the key difference here. Okay, so the volume profile is even more important. It's important on the head and shoulders, but the inverse head and shoulders is even more important, the volume profile. And this is the one which confused so many people, I believe, over the last week. And why I was saying, no, this isn't an inverse head and shoulders, and for me it wasn't because of the volume profile. The volume profile has to be exact. So the inverse head and shoulders anyway is obviously a move that you've seen a bottoming pattern. So you should see this after, say, a massive sell-off, and then you form your bottoming head and shoulders pattern, and then you rise. Okay, so this is a bottoming pattern. It's not something that you should see anyway. A 1,000 move up, and then you form a consolidation inverse head and shoulders. It's not really meant for that. It's more for a bottoming pattern. Okay, so the characteristics of the inversed head and shoulders, okay, is going to be the rise from the, okay, so let me just read this. Okay, so the sell volume on the left shoulder may be large. Okay, so you're looking for a left shoulder large volume sell-off. Okay, so as you're obviously breaking, imagine it's Bitcoin, because Bitcoin formed this, so you form a large sell-off. Okay, you're coming down to 4k, and you form a really large sell-off. Okay, and then once you've done a really large sell-off, okay, then you see a rise. Okay, you see your rise on the left shoulder coming up here on a decreasing volume. Okay, so it's very characteristic, isn't it? You sell off and you get large sell volume here. Okay, and then you get decreasing buy volume on the rise. So imagine that head and shoulders that we just went through. It's very much opposites, pretty much, isn't it? So yeah, obviously the rise from the bottom of the head should then. Oh, sorry, I've missed up a step. Followed by a less volume on the decline of the head. Okay, so less volume on the decline of the head. This is what I mean here is less bare volume. Okay, so when you basically, it's really important that when you form the head, you don't want to see a left shoulder, and then on the right shoulder, you don't want to see this increasing from this left shoulder, because that still means there's really big cell pressure. When you move down on on decreasing sell volume, it actually shows you. God, that even made me jump. That is really off-putting. Where I was going with this, when you are moving down, okay, when you're coming down on the head here, that just means Bitcoin's moving down, by the way. But when we're moving down on the head, you want to see a decrease in sell volume, and that shows that sell pressure is dying up. Okay, if you move down on the head, I need to close TradingView. I'm sorry, that needs to close. When you move down on the head here, okay, you want to see the declining volume. Okay, if you see an increase in volume as you're coming down, well, that just signifies that there's still selling interest, there's still more sellers in the market. E.g., you're not looking for a head and shoulders or an inverse head and shoulders if the head has more volume. It be that buy volume. If you see more buy volume coming in on the head, I really wouldn't be looking to trade a head and shoulders. I'd actually be looking more long, because I'm seeing an increase in bull volume as we formed a head. Or then you just have to look at it as a slow. It's not a head and shoulders. If you see more buy volume coming in here, do not look to short it. And if you see more sell volume coming in here, do not look to long it. You're going to be wrong. Okay, so it's very important that you see less volume coming in on this head. Okay, less volume coming in on the head on both the patterns, because it's just going to show you, really tell you that, there's the saying that volume precedes price action. So when you see the decrease in volume here, it's actually telling you look bullish, because there's a sell-off which has broken the low on less volume than the original sell-off. The sell pressure is drying up. When sell pressure dries up, you're looking for longs. Okay. Really, really important volume is. I'll do a whole stream on volume, but basically then on the rise from the bottom of the head to the top of this right shoulder, you want to see an increase in bull volume. Okay, so on this my throat, on this rise up here, okay, you want to see a rise in bull volume up against what you've seen so far. You want to see this volume increase. I need to take a drink. I'm really sorry. You want to see a rise in bull volume here. That's really important that you see this rise in bull volume. Okay, and then on the decline of the right shoulder, you want to see the sell volume decreasing. Okay, and then again on the rise of this right shoulder, this is the most important part, period of the whole pattern. You need to see an increase in bull volume upon the breakout of this right shoulder. Okay, so as you break this neckline, you 100% need to see the increase in bull volume. Okay, that is an absolute requirement. If you break up from this neckline with no increase in bull volume, pattern off the table. Okay, you're looking to short it. Personally, I would definitely look to short it. If you moved up here in no bull volume, the pattern is totally invalidated. Okay, so you need to see the increase in the bull volume here by a lot. Okay, it's not good enough to be level. It has to be an increase in bull volume, and a clear increase in bull volume. It should be more bull volume than what preceded it. All of it. Okay. So important. I'm going to give you examples of this working and this not working with Bitcoin in a few minutes. Okay, so I'll give you an example of both scenarios. This will be on the website, by the way. The break of the neckline needs to see an increase in volume. Okay, so that's so important. Okay. And again, you're not taking this entry here, you're not taking this entry here, you're taking the entry on the break of the neckline. If this has a massive increase in bull volume, you're very unlikely to get the retest, okay? So if you do see a massive increase in bull volume, the retest is very unlikely, if we're honest, okay? If you break up on increased bull volume, but not a massive amount, yeah, you can get that retest here, okay? The retest is giving a perfect opportunity because the risk is very low. Long stop loss back below the neckline, target the measured move. Again, here you see from the bottom of the head to the neckline, 1,532, neckline to the target, 1,532. Okay, so you all understand that? Everybody's following this so far? That's a good sign. I'll move on. So for the complex head and shoulders patterns, so these come around every so often. The only difference, the volume profile is going to be similar. Okay, the only difference here is that you can see things like two shoulders, one head. So left shoulder one, left shoulder two, head. right shoulder 1, right shoulder 2, and then you move down. The way you get the targets, you still want to see the volume profiles the same, okay, so still less volume on the head and less volume on the rises, big sell off on the sell off. And so it's complex head and shoulders and complex inverted head and shoulders. And you can also get two heads, so you could see it like this: left shoulder, one head, two heads, oops, left shoulder, one head, two head, double top, down, right shoulder, down. Okay, so you can get double heads, so you see two heads, and that's like a double top, isn't it? So yeah, you can get things such as complex head and shoulders where you're going to see more than one shoulder, or two heads in the pattern. Okay, so yeah, that's basically just a complex head and shoulders pattern. Okay, so that's the main head and shoulders patterns. Does everybody understand head and shoulders now? Okay, I'm going to now give a few examples, real life examples, and I firstly want to talk about the three peaks. Okay, so this is what we saw on Bitcoin: peak 1, peak 2, peak 3. Was this an inverse head and shoulders pattern? No, it wasn't. I'm going to load up the chart 2 minutes time to explain this. Why wasn't this a inverse head and shoulders pattern? Firstly, it wasn't an inverse head and shoulders because it's coming off of a massive upwards movement. We've just gone from 3k to 13k. This is very much the top. Inverse head and shoulders are bottoming patterns. Not that's the main reason. The main reason was the volume profile. Obviously I haven't got it here, but I'll show you the chart in a second. But basically the volume profile was just off, period. Okay, so I will show you that in a second. But what I would say this is, so this is called three peaks. So it's different than a head and shoulders pattern, but the same characteristics. We're still seeing a peak, and a peak, but it's not an inverse head and shoulders. The difference is the target's not going to be the same. You're not going from low to high, extending and getting the breakout, because it's not an inverse head and shoulders pattern. It's just a three peaks. Okay, so peak 1, peak 2, peak 3. What is this? It's a low, high, higher low, breaking higher high. It's just a three peak structure. You're still looking bullish, but you're not taking targets an inverse head and shoulders way. Okay, for all these, do you look at the depth view? No, I don't look at that. I don't look at depth view. So moving on, the three peaks in an for all these, do you look at the depth view? No, I don't look at that. I don't look at depth view. So moving on, the three peaks in an Elliott wave pattern. I wanted to give like perspective of how you can put Elliott waves into this. So you could say this is an A, B, C, and then you could say this is a 1, 2, 3, 4, 5. Okay, so you see A, B, C, 1, 2, 3, 4, 5. Okay, and then you sell off, etc. Okay, and if you imagine Elliott waves just in a head and shoulders, or that, so you see ABC 1, 2, 3, 4, 5, okay, and then you sell off, etc. Okay, and if you imagine Elliott waves just in a head and shoulders, well, that's wave 1, 2, 3, 4, 5, and that's obviously forms your left shoulder, head, and then your A, B, C is then forming your downwards move right shoulder sell off. Okay, so that's how you can get Elliott waves. You know, all the patterns, all the things that I've taught you coming together. Obviously, I haven't done Elliott waves yet. I'm aware of that. So when we get to Elliott waves, that will make more sense for you. But basically, it's like different things coming together. Obviously, when we're looking at the normal head and shoulders, we're seeing our bull flags, bear flags, bearish divergences. You know, all these sort of factors. SR flips coming together, you know, to give you patterns or different technical analysis getting you to the same place. Okay, so yeah, does anybody have any questions on head and shoulders right now, before I move on to going through this is this ERD? Yeah, ERD exchange listing. I want to talk you through this one. Oh no, let me first show you these inverse head and shoulder patterns. I wanted to show you the volume profile. Oh god, these alerts, man. So I wanted to show you this one. Okay, so here we go. This is the one that everybody on Twitter was claiming. Okay, so let me just show you this first. There's your left shoulder, or you know, you've got a few different ways of looking at this: left shoulder, head, right shoulder, or left, right. So this is where you could say a more of a complex head and shoulder, inverse head and shoulders. I'm not looking at it like this. Okay, if you're looking at this as an inverse head and shoulders, well, guess what? You had to go from the bottom of this head to the neckline, clone, breakout, target, 14k. Okay, but why was I not trading this as a head and shoulders? Why was I trading this as 3 peaks? Okay, as shown here. Why was I trading it like this? Well, because the volume profile. So let's load up the volume here a second. Let me take off of this. We don't want the visible range just getting in our way. Okay, so you see here, you can see here, and let me just close down this. We don't want to see that either. Okay, so here you can see the volume profile was totally off. Is there a rise in volume on this? No, it's not really, is it? It's declining the whole way down. Okay, you see this? Here's our really high volume. It's just going down and down and down, isn't it? Is this a volume profile? As I said, an inverse head and shoulders is the most important volume profile. Have you got this going on here? Absolutely not. This was not valid at all. If you were listening to, I don't know, half the people, you know, people claiming this was an inverse head and shoulders, is just wrong, because the volume profile was totally off. Okay, really off. Volume profile is really important. And you can see throughout the whole pattern, it's bearish. You know, you're not trading it as an inverse head and shoulders. You are trading it as the 3 peaks. So you could just view it as this, okay? And then what you're looking at here, wave 1, wave 2, I guess wave 3, wave 4, wave 5 in the end after this sell-off here. But nevertheless, you would just view this as a high, low, higher high, higher low, higher high. And, you know, now you've obviously got a downwards movement. But basically, it's just explaining that this is not an inverse head and shoulders because the volume profile is wrong. And for an example of a volume profile that was right, and this is one that I obviously posted on Twitter many months ago now, okay, or YouTube, wherever I posted this. YouTube, I think I made a whole video about it. Our bottoming inverse head and shoulders pattern, okay? So this was one that I was talking about in the time we had our inverse head and shoulders here, like an actual real inverse head and shoulders, okay? And there is your left shoulder, there is your head, and there is your right shoulder. And what can you see about this? Well, although the volume profile overall wasn't nice, look at the massive increase in bull volume. That is what you want. You break the neckline and look at that volume. Look at that volume. Out of this world high volume come in right there. That's what you want. You need to see an increase in bull volume. Whether you're looking at this anyway as 3 peaks or whether you're looking at inverse head and shoulders, that confirmed the pattern totally. That bull volume meant, okay, it's very unlikely you get a retest, because that is a massive increase in bull volume, okay? So it was very unlikely you were going to come down and retest this because that volume's so high. And at the end of the day, you do form a 3-peak pattern, massive bull volume. When you compare that to what we saw up here, okay, compare that to what you saw up here. Do you see a massive increase in bull volume here? I don't. Okay, you really don't. You see a kind of an increase, but it's nothing like. It is nothing like that increase there. Look at the difference. That is massive. You're not going to retest. That is really, really, really bullish. When you see that, that is amazingly bullish. When you see this break, so now you're going up on a basically declining volume, okay, because this is clearly going down, isn't it? Okay, that's obviously a red flag in itself. Okay, so yeah, basically, so yeah, that's going through a good and a bad example of head and shoulders patterns and what you're looking there. Okay, in that case, the break of neck already reached the target. Yeah, this one actually doesn't reach target, by the way. So this, you know, if you were trading it as this, it was nowhere near target. Yeah, that one didn't reach target. Obviously, the other one reached target. So the other one, you know, for if you were looking at this like this, obviously it smashed target. But well, obviously it went through target. But if you were looking at this as still looking at this as the targets, okay, low to the neckline, breaking, and you can say you wouldn't have been unhappy with taking this as a target, because guess what? Okay, you hit your target here, and you actually saw a really big decline. Okay, so you got the decline, and then you had the option of buying the dip. Okay, and then you can do your fibs, and look, you hit the 382. Start at a breakout, top of the breakout, selling at target. So you sold 5,000, you got to buy back 4,700. So you sold and you bought back lower. So trading that as an inverse head and shoulders would have worked, period. And then understanding the volume increase, knowing that, or finding it very unlikely you're going to come back down to 4K. Yeah, that just gives you a nice example and a bad example. Okay, and then obviously your bad example of why would anyone trade this in inverse head and shoulders. Yeah. There you go. So yeah, that brings me to the next step of today's video, which I wanted to go through. Okay, yeah, I wanted to go through ERDR. Okay, ERD. Okay, I don't even know this name yet. It's been on a week. So what you are looking at here, this is a print screen from the 5-minute chart. Okay, I'm going to talk you through this. Okay, I'm going to talk you through this. Full transparency, I did not trade this. I wasn't even at my computer at the exchange listing, but nevertheless I can still do an educational run through of how I would have traded this if I was at my computer. It's a shame that I wasn't at my computer, but yeah, I was busy, so I did, yeah, just so you're aware, I didn't trade this, but I can still explain educationally for, like, you know, future ways if you want to trade this, how you can be looking to trade it. Okay, but yeah, just so you're aware, this was not a trade that I took. Okay, but nevertheless, the setup is really, really nice, and it's good for, you know, it's good for education, isn't it? So yeah, that's how I'm looking at this. So right, what are you seeing here? Really, really simply, okay, your exchange listings. I've went through an exchange listing before, and it's kind of similar. It's kind of similar, okay, and that was all to do with your exponential moving averages, wasn't it? It's that you're not buying until you get your exponential moving average cross to go bullish. Okay. Okay, so here, and now we're combining it with patterns. Okay, so what we can see here is bearish EMAs, can't we? Bearish EMAs. The EMAs are not bullish at this point. Okay, we are not buying, period, until they turn bullish, or we can see a reason for the market to tell us to buy. Okay, we're talking about a drop at this point, okay, you go in from 68 and you're down 33% in the day, so you're down, you are falling heavily here on this exchange listing, even higher. Somebody bought on this coin 200 sats. Somebody bought this is crazy. They lost 72% in an hour. Feel sorry for that person. But basically, yeah, you're falling down, and what is this? It's a falling wedge, isn't it? Okay, you're falling down and you start to get more compressed and compressed and compressed, and look at this. Okay, you break out here. Okay, you break out of the falling wedge, you back test the falling wedge, and there's your exponential moving average crossover. Okay, so how are you looking to trade this? You are entering a long at 48 sats. Okay, you enter your long at 48 sats. You're patient, you're patient, you're patient, you're patient. You're not buying, you're not buying, you're not buying. Guess what? You didn't buy 45 sats because you're not trying to knife catch the bottom, just like you didn't buy 50 sats because you're not trying to knife catch the bottom, but you are buying 48 sats. Where are you getting your target from? Really, really simply, this is top of the falling wedge to the bottom of the falling wedge, 382, 618. Simple as that. Simple as that, everybody. Move this across, and this is just like textbook. So nice example. Look where you come up to. Look where you come up to on this pattern. Buying 48 sats. When you have your bullish crossover, look how you cross bullish here. Okay, that's the 200 crossing the 5. Go away. Okay, that's the 200 crossing the 5, and you can see here, there's your bullish cross. You come up to the 382, sell off. That's target 1382, sell off. Come up to the 618, hit 618, sell off, and then you actually get your bearish cross right here, and that's out of the trade. Whether you're just looking at EMAs, buying 48, selling 55, which is obviously a gain of 11%, or whether you're buying, or whether you're selling 382, buying back in possibly, selling 618, buying back in, you know, whatever you want to do, that's a 20% gain. Okay, and that's just an exchange listing, how I trade exchange listings. Didn't trade this one, okay, but that's how I would have if I was at my computer. Just being really patient with the EMA crosses. Once the EMAs have crossed, that's my buy signal, okay, and then when you're looking at the falling wedge, okay, it's fibs from the top of the falling wedge to the bottom of the falling wedge, target the 382, sell off, target the 618. That's final target, sell off. Okay, you can target the top. Okay, you can target the top here, but obviously when you start to see this then changing bearishly, and you get your bearish cross here, then that is like, okay, I've just got my bearish cross. Am I still going to be targeting with 68 sats? Not really, because you've got your bearish cross. Okay, it's unlikely that you're going to come back up and challenge that. And then you can see here, sell off, sell off, sell off, bearish cross. So buy 48 sats, maybe sell 55 sats, bearish cross, not interested, all the way down here. This is down, by the way, then another 30% in a day, selling off, selling off, selling off, selling off, and look what you're just about to do. You are trying to just cross bullishly now, so this could be another buy signal. Okay, at 37 sats. So you can just see how this method of patience is just giving you nice buy and sell signals, along with pattern of the falling wedge, along with Fibonacci, bringing things together for a nice setup, isn't it? So Elrond coin. Yeah, there, Elrond coin. So yeah, that I hope that has been helpful for you. I just wanted to go through this because I've done one in the past, and that was with EMAs on the 15. This is on the 5, and also combining with that pattern, how why patience is needed in trading, I guess. So yeah, that has brought me up to now the Bitcoin technical analysis, which I do want to go through for you all. Because I think this is really, really important. Okay, so what was the time frame for those EMAs? That was the 5-minute time frame that I'm going through here. Okay, so just like on the 5-minute here, where was your last bull cross on Bitcoin? You would have bought 11,000, and you've not sold until this cross here. So even on the 5-minute time frame on Bitcoin, it works pretty well, doesn't it? But yeah. So yeah, that it was the 5-minute time frame, by the way. So now I want to go through Bitcoin for you all, okay? Because this is obviously a big structure, pretty big importance of what you're going to see going on right now. Okay, I'm going to give you an overview from an Elliott wave perspective really quickly of two scenarios that we're looking at here. The first is 1, 2. Oh, go away, Link. The first was 1, 2, 3. We've put in a 4, and we're going up for the 5th. Okay. And another scenario is that you've actually put in a 1, 2, 3 ABC running flat 4 and a 5th. Okay, so we have two scenarios going on here. Let me just change the color on this other one, and we don't need to see these waves. Okay, I just want to talk you through both of these scenarios because they're both really valid with what's going on right now in Bitcoin, and it's going to prepare you. Okay, it's going to prepare you. Obviously, the bull scenario right now, which is why I've labeled this 12,070. This for me is a really big support because of the option of seeing a 1, 2, 3 wick, possible still okay for the 5th. Okay, you close below 12,070. This count is invalidated. Some people are not going to like this wick. I'm okay with wicks, but you close below 12,070. This count is off. Okay, this count is off, invalidated. Or unless you're looking at a diagonal, but I'm not going to get into diagonals in this video. Basically, just keep it simple. You don't really want to close below 12,070. That's a really key support to keep this count intact that we're moving up for the 5th. Okay, the alternate count. Okay, the alternate count is that you've just put in a W, X, and you're moving down for the Y. Okay, and what you will see here is this was your A, B, C. Okay, and then this is your A, B, C, and the X. Okay. And what I want to show you here is where do you look? Okay, I've not done Elliott waves, I'm aware. I will cover this in more detail in its own stream. But when you look for an ABC, your target for the C is a 1-to-1 extension. That is your target for an ABC, okay? Bottom of the A, top of the A, fib extension, bottom of the B, okay? Pretty perfect, actually, that you hit the 1-to-1 and sell off. So that does lean you into a WXY because of this. But first, I want to see it if it closes below 12,070. If it doesn't close below 1,070, then we can still have a 1, 2, 3. This is wave 4 and up for the 5th. It's the potential, okay? And you want to have both counts until really that one is invalidated. This could invalidate overnight, for example. If you close below that, then that invalidates it, and you're looking more at the X. But nevertheless, pretty amazing one-to-one extension there, isn't it? Literally hitting it to a tick, selling off. Okay, so that gives you like 2 wave counts to look at on Elliott waves. Ones that you've got a top, ones that it's not, ones that you've got your correction finished here, one that the correction's still in. Okay, so yeah, that's kind of Bitcoin from an Elliott wave perspective. You know, if you're looking at this just standardly, okay, that's your really kind of important support level. 12,070 wouldn't, you know, you close below that, I think you're going to challenge Monday's open, to be honest. Okay, Monday's open pretty certainly will, yeah, I would more or less expect that to be tested. And then you also have that trend line that would come into Monday's close that could come down as a support as well. Okay, obviously if you come down and you do this, that's bearish. So yeah, it's like, you know, I can't tell you what's going to happen, so you're going to have to like do your own technical analysis as this happens, as this comes into, if this closes below here, are you finding support at Monday's open, or actually do you do this, which is nice, do you do this, which is also nice, or do you do this, which is really bearish? Okay, so you've obviously got to think of the scenarios in your head of what's going to happen here. Okay, this is a really, really key level. You obviously have bounced off it once. Okay, you did bounce off it once here, but you are just selling off again. So Bitcoin is in a really high, important place at the moment. Okay, this could be a real big move. If we lose this, yeah, it's not like I'm turning bearish. I'm not turning bearish on Bitcoin, but short term, that is not good. So short term, you can expect retracements. And I will talk you through this trade that I did do today, because it was a nice trade. Okay, so obviously we have, let me just show you these levels. So we have our daily level here. Okay, so you see this daily level, that's just simply taken from the high of our daily candles, daily closes, daily level. 1 hour, okay, 1 hour level, 1 hour chart, 2 1 hour closes together like this, okay, coming together. That gave us our daily and our hourly level. We'll move this over, okay, come down to the 15. And what we can see here is pretty perfect. You had a range between the daily low and the hourly high. Okay, so you were ranging here. You form a shooting star candle. This shooting star candle is a very bearish candle because it's a swing failure pattern. You take out the highs, close back below the highs, bearish candle. I did not short this candle because I wasn't at my computer. Bit annoying, because I would have shorted this every day of the week, but I was not at my computer, so I could not short this. But no, doesn't mind. This is why you get retests. So why do you get retests? You get retests because of people like me that miss out on this. Okay, you get a drop down, and this was actually to an important Fibonacci. So here you had a 382 and a 618 coinciding. So you had people buying the dip here, and I did buy this dip, by the way. I bought the dip, but the target is the daily level, okay? And this is SR flips. I've gone through SR flips. This was our daily support. This was our daily support, okay? We have lost the support. So once you get a big sell-off, you come up, you test it, and you sell off again. That is all you would expect. You are not ever going to be looking really bullishly after a high volume sell-off like this. So let's load up the volume. Look at this, okay? This was a high volume sell-off, okay? High volume sell-off, more than what you had seen throughout the whole of the last 24, 48 hours, okay? So when you see a high volume sell-off like this, okay, when you see this, are you looking to long? No, you're looking to short that retest. So I missed my short up here, but no way am I ever missing that second opportunity, because that is an opportunity and a half right there. And literally it hit it, okay? It hit it to pretty much the dollar, okay? Pretty much the dollar that you got into that short. So it was like a perfect opportunity when you see this, okay? So you see that, okay? Support, flip after a high volume sell-off. You're always looking to take that retest flip, okay? So that was then an SR flip, and you sell off again, okay? So this would have been on like a 1 minute chart, okay? This would have been your bull flag on the 1 minute, okay? Bear flag on the 1 minute. So flag, bear flag, down again, okay? And that would be a short that you have to take every single day of the week, okay? After you see a high volume sell-off, get in on that short, and you just need to do that. So yeah, that's so I got lucky that I was at my computer for the secondary, because if you're somebody that was not at your computer for this hour, yeah, that's not a nice scenario to be in, being like 8% down. Yeah, it's quite difficult, isn't it? And that's where you can get continued sell-off, because people are now like, imagine all the people that bought up here and are sleeping or something, and they wake up and prices down here. Well, a lot of people are going to sell, so that's how you can keep going down, because people are now underwater, longs are underwater, they need to close, and that brings the price down. This is a really, really important support level. I entered. Okay, so I'm still in a long, although I'm in my short, I'm simultaneously in a long, but this is obviously not looking good, basically. So yeah, there you go. That gives you my overview on Bitcoin. Okay, is an ABCDE triangle also possible, Daniel? Yes, so that is possible. So you do still have the option of a triangle. Okay, sorry, I didn't do this one, but ABC in the A, ABC in the B, ABC in the C, ABC in the D, ABC in the E, and we move up then again for another leg. Okay, so that's ABC, 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 and you go up again. So that is a scenario. Okay, so you do have 3 different counts going on in this chart, to be honest. But I would say just look at price action. Okay, I still remain bullish. You have to remain bullish. How can you be bearish after this sell-off? You would be kind of crazy to turn extreme bearish after this sell-off. You're still holding supports, okay? There's no real need to be extremely bearish at this point. Yes, I'm not saying go into a leveraged long here, okay? I am saying that this is now all resistance, okay? I am aware that you can do this. I'm not telling you to long. I'm not giving you financial advice. I'm just saying, at the end of the day, you're still in the uptrend, okay? You have just gone low, high, higher, low, higher, high. This could just be another higher low, and you just move up from here, okay? So, yeah, it's too early to turn bearish, okay? It really, really is. Yeah, that's all I'm going to say about that. Is my internet still chat disconnected, apparently? Chat disconnected. Please wait while we try and reconnect you. I'm not sure if you can all see this, but I am unsure if I can even read this chat right now. I hope you can all hear me, by the way. I'm not sure if my internet's just died. You can probably tell my internet is so bad. It's so annoying. Oh. If you look at BSV, I will do this one just because apparently it's forming it. BSV, it's potentially forming a head and shoulders, left shoulder, head, right shoulder. Yeah, maybe. Let's see. Oh. Yeah, I mean, this volume is awful, isn't it? Just period, this volume is really awful. So, you want to see an increase in bear volume as you break this neckline, okay? Because this is just dead volume. Really dead volume. I mean, you don't even increase on anything, really. Obviously, it is nice. So you do have declining volume as you go along. But I'd want to see some increase in bear volume on the sell-off here, because you've not seen anything. Literally, you've not seen anything. That's just dead volume. So yeah, that is a nice head and shoulders top. It is a nice head and shoulders top, but you do want to see an increase in bear volume here. But yeah, nice spot. You're back. Okay, it cut out for a second. Sorry, my internet is really, really bad, isn't it? If the WXY has a 333 structure, if Y is a zigzag, would you expect a substructure of 335? Yes, absolutely. So if Y is a zigzag, you're looking for a 535. Obviously, 5 in the A, 3 in the B, 5 in the C. 100%, yeah. Cool. So does anyone have any questions regarding what I've went through today? Has anyone got a question regarding ERD here or head and shoulders? Does anybody have any questions regarding this at all? Okay. So we do have a question here. When entering that short on the SR flip on the channel on the 1 min chart, is that with a market order? Yes, I market short this. I'm not bothered about trying to get the best price. When I see a sell-off like this, I want to get in. I'm not entering. I'm not bothered about getting filled on a limit order. I just want to get filled on a short. Yeah. So I was shorting this, okay, but it was not from a limit order. We get up here, I'll take the fees, okay, because yeah, I'm expecting to make at least 3% profit. Okay, when I'm expecting to make at least 3%, okay, it actually ended up more than that. Okay, it was more than 3% here. But if I'm making at least 3%, then I literally couldn't care less about paying like an extra 0.1% fee. Like, it doesn't make any difference for me. So basically, to answer your question, yes, this is just a market short. I'll just take the price or whatever I want to get filled at. You know, why try and get in on a limit order and save yourself 0.1% fee when you're now down nearly 7%? Yeah, so yeah, basically just market short that. In ERD, your stop would have been below the bottom or below the last swing low. There's so much percentage diff. Yes, obviously, like each pip is like 5%. So on ERD, let's go back to it a second. So you are starting to move up a little bit. Let's just see. So yeah, if you were entering on, if you're entering on 148, okay. So if you are entering on 148 as you get this cross here, okay. Yeah, you obviously are targeting the 618. Okay, stop loss really is going to be below this last, either below the real low or below this market structure low. So really, you have two options: high, low, higher high, higher low, higher high. You could literally put your stop loss at 48 sats for a really aggressive sort of stop loss. You literally could have put it one sat below, because that is your low. High, higher low, higher high, higher low, higher high, double bottom, move up. So you literally could have put your stop loss at one sat below this if we're looking at this structure, okay. Or a more conservative stop loss would have been below this low, okay. And obviously the most conservative would be below the overall lows. That's, you know, you still got a 2-to-1 risk to reward, and obviously at the time you could have been targeting the top of this, and that obviously gives you a 5-to-1. But yeah, I wouldn't give. Yeah, I don't think there's no need to give yourself a low stop loss like that. Literally, your stop loss could be one sat below, okay, because you've formed a bullish market structure. You know, that would, to be honest, that would be a conservative. That would be a conservative stop loss as well, just below this. So yeah. You want to look for the structure of the market to use your stop losses. Really, you could have placed it one sat below, but that is a bit too tight. I'm not even going to lie, that is a bit too tight. So just use this low here. So you're basically putting your stop loss below the low, because if you've just come outside of a falling wedge, you can back test the falling wedge, but you shouldn't be coming back with inside it, should you? So yeah, that's how I'd look at that stop loss. Or Bitcoin moving down. Okay, yeah, that, and this is why, like, you don't care about getting an extra percentage on a fee. So that has now invalidated really for me, like, that account. You're now closing below it. So yeah, this is pretty. That's a big move. So like the people that are like worrying about a 0.5% here, not even 0.5% on a market fee, like you just want to get filled on that retest, because yeah, that's a pretty aggressive move down right now. Not gonna lie, that's pretty aggressive move down. So yeah, you just want to be really careful at that point. I want to trade this. Yeah, so you're coming down into this cluster right here now. So you're coming down into this cluster, which can act as support. So you are coming down into that cluster, but you are, you know, maybe you have the EQ of the move here as well. Yeah, this is really nice. So you look from the low to the high, and you look at the. So this is, I want to trade this, by the way. I'm going to go and trade this in a minute. You look at the EQ of the move, the 0.5, and you pretty much bounce off of it perfectly. And that's the EQ of the move from Monday's open to Monday's close, EQ bouncing. That's a scalp I would take as well. So I'm missing out on like a 1% move here. That's pretty annoying. But yeah, I am going to go trade this. Hi, Daniel. I tethered up at 13k. In the current climate, do you tether up, or is it better to edge in alts for better gains? Depends what you want to do. Yeah, you can't go wrong with tethering up. If you think you're at a resistance that's going to break down, yeah, you're better off tethering than taking extra risk and going into an alt, to be honest. Obviously, you know, you have to think. You are now nearly 10% drop there, okay, but you know, obviously BAT went up 20%, so yeah, you'd made more money going into an alt, but is it a lot more risky? But for example, let's say you put all your money into Quantum, and then you're down 10% on Bitcoin, and then you're down 15% on Quantum. You know that you're putting a lot of risk in yourself. You're a lot safer going into Tether, okay, to be honest. Unless you really know what you're doing, you're a lot safer going into Tether. So yeah, good question. But unless you're really confident in what you're doing, you're giving yourself extra risk going straight into an alt. Obviously, yes, it played out on some altcoins, but if you had chose the wrong one, then you're suddenly down 15% USD and then another 15% on BTC value. You really have to know what you're doing if you're starting to do it with alts, or like really, because otherwise you could lose even more money. Okay, so yeah, be careful. It's really annoying. That's like a 1% bounce. This is like what I live for. I live for 1% bounces like that. So yeah, I'm going to go trade this. So I hope that you all have enjoyed this video, and it has been helpful for you all. Obviously, hopefully now you have no, this is the thing, like I say, you need to go back and watch this video a few times. Go back and watch it once today now. Watch it back twice. Okay, watch it about 3 times. Okay, make notes on every single thing that I've said. You take notes, and it's going to help you. So watch it about 3 times. It's not going to hurt. So yeah, watch it back, make notes, learn, prosper, succeed, make money. So yeah, I hope you've all enjoyed tonight. Thank you, everybody. And yeah, I'm going to go trade this. So yeah, thanks everybody. I'll catch you in next week's stream, where I am going to give you all the spreadsheet for logging your trades, and yeah, so I'll also obviously give you another lesson. So yeah, I'll catch you all next week. Enjoy this extreme volatility. Be a little bit cautious, a little bit careful, and yeah, catch you all next week. Cheers, everybody. Thanks. Bye.